Yes, that's true. Phoenix and Baltimore are located in different states, but we are experiencing a lot of the same. In Phoenix, we're also seeing lots of multiple offer situations, homes going under contract quickly, and buyers offering over list price. I'm curious, when you say Phoenix is down 30%, what specifically is down 30%? Or are you just referring to predictions from national media that hasn't happened yet? Because the only thing that I can see in Phoenix that's down nearly 30% are the active listings. And when inventory falls, that typically means prices start to rise. Now, prices have absolutely fallen since the peak of the frenzied market we had during the pandemic. It was truly unprecedented times in health and housing. Here's the median sales price in Phoenix, and you can definitely see a decline in price since the peak of the market in May of 2022. But that decline is only 12.5%. And if you're comparing to March 2022, the decline is only 9.1%. But maybe you're talking about the average sales price and not the median. The average sales price in the Phoenix area has also declined, but you can see that for the last few months, we are on the rise, making it look like the bottom of the market was in December of 2022. The average sales price since the peak of the market is down 8.62%. And compared to March of last year, the average sales price in Phoenix is down 5.67%. So this is not to say we haven't had a decrease in home values in the Phoenix metro area, but it's nowhere near the 25 to 30% you're hearing in the media. In fact, the average sales price per square foot has been on the rise since the beginning of the year and still well above what we had in 2019 to 2021. And contrary to what you might be hearing in the media, the real estate market in the Phoenix metro area has really sped up these past few months, and we are technically back in a seller's market. This is the Cromford Market Index, where anything over 110 indicates a seller's market. Now we're almost to 180. And here's another metric that measures supply and demand in the metro Phoenix area called the contract ratio. With this metric, anything above 60 indicates a hot market for sellers, and we are currently at 78.9. And this might look like a downward landslide compared to the contract ratio of 200 last year, but compare it to 2019, which was our last normal, healthy market, and we are right in line. At the end of last year, when local real estate analysts said that we hit the bottom of the market, only 63% of homes successfully sold. Now there's been a 25% increase in listing success rate, and 79% of listings are successfully selling. Once again, it's another metric that's been brought back to a normal, healthy territory. And you can compare this to the years 2008 and 2009, when the market actually crashed and only 21% of listings were successfully selling. Lastly, I will leave you this. The real estate market is cyclical and it will always ebb and flow. But in a true housing market crash, the home values will decrease by 50% or more. In 2008, for example, home values dropped by 55%. In order for that to happen in Phoenix, the median sales price will have to fall to $240,000. The last time we saw that happen was in May of 2014. We have a long way to go. And Chi, thank you for tagging me.